Hello and welcome to ActivTrades biggest market movers. Today I'll be looking at the Australian dollar against the New Zealand dollar. I'll be discussing the fundamental aspects of this currency, and I'll also be trying to identify the key technical levels that you need to know. So some very interesting developments on the Australian dollar against the New Zealand dollar. This week we have seen a 200 pip plus rebound to the upside for the Australian dollar against the New Zealand dollar here. And if we have a look at what's happened, I think we could really start to summarise it in going back and having a look at the New Zealand Central Bank meeting, where in that statement, even though they didn't change their interest rates, they didn't lower them, but in the statement they did say that the exchange rate is starting to become a problem for the economy, and in the statement a number of times they've highlighted that the New Zealand dollar is too strong and it's causing adverse effects to their economy. So in their next meeting, we may see that they start to cut the rate, and as well as really highlighting that their exchange rate is a problem, and that's something that we need to watch as traders, because if central banks are starting to target the exchange rate, then really we need to start to look for opportunities to trade that. So today I'm going to have a look at the Australian dollar against the New Zealand dollar. So what we've seen over the last few days as well, we've seen that the Australian dollar has started to rally against the US dollar. We've seen the pound start to rebound, and we've seen the euro has had a minor rally as well. So the New Zealand dollar against the US dollar has played dead and it started to decline. So that's very interesting. So our traders finally starting to sell the New Zealand dollar. So if that is the case, then we need to look for opportunities to trade it, because really the essence of currency trading is finding strength against weakness or weakness against strength. So let's have a look at the key technical levels. So you can see really, if we have a look at this pattern wise, it does look like an inverse head and shoulder, and that may be really signifying that this pair is about to bounce. And if it is about to bounce, then really the best thing we can do is try to identify the key technical level. So if we do get some pullback and it does hold, really the pullback happened around the 102.50 area. So any really pullback in this currency may be a good chance to go long. If we have a look a longer term at this pair, I mean, we can see that it's really bottomed out over the 102.50 area. If we draw a Fibonacci retracement to that structure high around the 113, we can see that it's easily pierced the 23.6 Fibonacci of that retracement, and the next really at 38.2 in the sequence is sat around the 106.38. So that may be a target for the bulls, but also if we have a look higher up, you can see that the 107.70 and the 109.90. So there's a lot of interesting levels that it could go to if this does start to rebound, and obviously, you know, any pullback in this pair may be an opportunity to go long. And I think over the next couple of weeks we'll certainly be having a look at some cross currency pairs against the New Zealand dollar if the New Zealand dollar is about to decline and other pairs may find some strength against it. Thank you very much. This has been ActivTrades biggest market movers, and you could trade the euro dollar for spreads as low as 0.7 pips.